to start.
Pardon me? Okay.
Hey, everyone. This is Marathon Money, and this is your boy, Kenny Coins, and you already know who I'm with. Cary, wickedstocks.com. Also, Cary has an advisory service for commodities. Am I right?
I do. You're right. Almost 30 years now. Artac Advisory. Yeah.
Yeah, you guys got to check that out. Actually, since I put it in the group chat and also in the Facebook Messenger group chat and also the Discord group chat, I didn't realize a ton of you guys did commodity trading. So I think you guys will really benefit from that. Me and Cary's working on to try to set something up. I know a lot of the older gentlemen, the older people in there are big commodity traders. That they really look into those futures and contracts and stuff like that.
That sounds great.
That's one thing I really want to say. I know I mostly get on here. We talk about what he does at wickedstocks.com, but also another thing that everybody wants me. I'm going to start season 2 of the CEO publicly traded CEO interviews, probably late June. I did the math. We made over $317,000 on the tradings that we did on those interviews and option tradings and all that stuff. So it was a really great first season. Hopefully we can match that the second season or maybe get higher. I do have 5 publicly traded companies already lined up for the summer. So hopefully those go great. But man, we gotta get into the market. We gotta get into these stocks. And also I do want to ask Cary, what do you think about the leniency off of these tariffs before we get into looking at charts?
Well, I think it's pure Donald Trump. I think he watches the polls a lot. Obviously, he had the 10-year Treasury note market whispering in his ear a few weeks ago when both the stock market was plummeting and the bond market was plummeting, which is a rarity. It was basically selling all things American at that time, international. So there was a lot of money when we fell back 3 or 4 weeks ago that left the U.S., went into Europe and Asia. I also, just as a reminder, and you know this too, the Japanese especially have over $1 trillion in U.S. debt and dollar-denominated debt, as the Chinese are close behind. And so they have the ability to raise our interest rates if they decided to continue dumping our bond market. Now, I don't have, I have a TLT analysis that I follow. I don't think I have charts prepared today, but I do have a downside trigger for the TLT, which is the long bond in ETF format. In other words, as the TLT drops, interest rates are climbing. And as the TLT rises, interest rates drop, just like any bond instrument. So, but yeah, I think what happened a few weeks ago is Donald Trump and many of his staff understood that they were right on the edge of setting the market, the global markets, into a severe economic tailspin in the form of the bond market just sort of continuing to cascade south. That would have been higher rates. I see a downward trigger in the TLT that if we take it out, that over the following 3 to 5 months, the interest rates could climb 1.5%. We haven't reached that point yet. And so, so there's that. But yeah, I don't know if I've answered your question. I really don't know. This is the interesting thing. We don't really know what is going on. I think if the market quiets down, I think Donald Trump then has the capacity to throw another monkey wrench into the situation. So there's a lot of unsettled anxiety right now. I think the odds-on favorite, though, from what the markets are saying, is that eventually we're going to get through this. And looking back at this 6 months to a year from now, the tariffs are going to be very similar to where they were before Donald Trump took office. I don't think they realize the amount of economic havoc it's going to wreak in the broader economy. He's got a lot of Fortune 500 companies knocking at his door, and they have his ear because they're larger corporations. But something worth remembering is that 80-90% of our export businesses are small to mid-sized companies, and they are. If you listen to some of the stories of some of these exporters and importers, some of them are just going to have to shut down. I mean, it's going to wreak havoc within that sector. And I think that is beginning to filter through to the administration too, that this could be a much worse economic outcome if they were to stick with these 10 to 25% tariffs. China alone, we could slide into a recession if we stay this 125% tariff rate, according to the Laffer curve, which is, they also use that in taxation policy. When tariffs get to a certain point, they get so high that they disincentivize trade in and of itself. So, we've basically shut down trade with China and vice versa. And so those tariffs need to come down if that's to open up again. And I think that they will, because I think it's just a big deal.
Yeah, I saw that China is also trying to ease because it's affecting their economy. It's affecting medical supplies, it's affecting food, it's affecting their imports and exports. They're
Sure.
trying to like soften ease as well. Um, but the real question, how does that stuff affect the charts technically? Like we're about to pull up some charts right now, but how does
Yeah.
it affect the like charts? Because before the tariffs, the charts are showing they're going one way. And then when you hit with the tariffs and you got this 3,000 points on the Dow going down, the S&P 5% down, NASDAQ 5% down, overall stocks are like 5 to 15% down. What we thought December 2024, November 2024, it's not what it is today on April 2025.
True. We've recovered more than half of the losses from those February highs. We're actually approaching the 5/8, the infamous 5/8 Fibonacci retracement levels on both the S&P 500 and the NASDAQ 100, which I'll show in a moment. I don't think we're out of the woods yet. I think the rallies that we've seen, the rally that we saw, especially late last week, I think it's going to be challenged this week, just above present price levels. I don't know exactly where this market's going, but if I were to bet on the market, if we can't get up and over those 5/8 Fibonaccis that are just above the market, the path of least resistance is down. But once again, because of the back and forth nature of the tariff actions or the conversation, I don't think they're going to fall out of bed all the way south to these longer term price points that I'd mentioned before, at least in the near term. I think we could get locked into what I would call kind of a highly volatile, a two-sided framework that could move through much of the month of May.
Man, what's the first stock we got?
All right, let me go. I'll just start with the indexes, I suppose. I'm going to go ahead and share my screen. Let's go here. Let's start with the SPY. Once again, the SPY is nothing more than the S&P 500 in ETF format. And so the S&P 500 index looks identical to this. And I've shown this chart to you before. I think in the last show, we had already closed below this 2-year channel bottom. That is at
I'm not seeing the chart. Did you share
you're
it?
not. I did. Let me go back to the website. What did I do wrong? Oh, I'm sorry. You're right. Okay, here we are. You ready? There it is. You see it now?
Yes.
Okay. So 4 weeks ago, we closed below this rising 2-year channel bottom that stems off the October 22 low. This is the beginning of a 2-year bull market. We broke that. We fell basically back to the 22 high of 479.98, and we've rebounded nicely off of that. This down week 3 weeks ago was the tariff announcement, 25%, and then it became 125% with China. And then we had the 90-day pause a week later, and this led to the rally. And so the way I see the S&P 500 or the SPY is you have the 2-year channel bottom at 558.99, and you have the upside 5/8 Fibonacci at 563.02. This area is narrowing over the next week or two. Now, if we can get up and over this, then I think the worst is over. I think what that means is that the tariff policy will be continued to be relaxed, and we will ease back more toward the way it was 6 months ago if we close above 563.02. Until then, this is the area that if you're long over the last few days, over the last few weeks, where you could take profits and consider playing the short side, because I think that if we're below 558.99, we can, over the next 2 to 3 months, continue south into the 440s, 460s. This is a 5-year channel bottom. One of the big takeaways with this chart is just to remind the viewers that the 5-year trend still remains bullish above 444, 461. The question is whether we're going to see that anytime soon. And if I had to bet, like, where are we 2 months from now, if we can't get over 563.02, it'll be closer to the 440s, 460s than where we are presently right now. But if we can close above 563.02 at the end of the week, this is the upward pivot. I'd see the 613.23 high that was put out in February. This is a 3 to 5 week move. And I think as we continue into later years, 630.67. Now at 613.23, you can see we've got kind of a inverted head and shoulders possibility going on here, where you've got the left shoulder, you've got the head, and if we get up and over 563.02, 3 to 5 week blast back up into the 610, 613, and then we could trade sideways again for a while. But right now, if it's just taking a look at a directional probability, I'm still a seller in the upper 550s to low 560s, and I'm stopping out and reversing and going long if we can close above that 563.02.
That confirmation that we're waiting for on the SPDR, the SPY, or the S&P 500, that's kind of like more news confirmation, waiting on see what Donald Trump says, see how Donald Trump moves forward, or the Federal Reserve, or any type of news that would push this above 563.02 to turn it bullish. But let's imagine we don't see that news, because this is kind of what I'm hearing, and please correct me if I'm wrong, is that if we don't get that, well, we're reducing the tariffs on China, we're reducing the tariffs, we're lowering interest rates, or whatever the case may be, to soften the markets, this is more likely still a seller's market.
I think so. This is still selling on strength ever so carefully. I would wait for the market to reach into this 558.99, 563.02 area. I do see the likelihood that we will test this area this week. We do have non-farm payrolls on Friday. That's always a bit of a market mover. There's a little bit of Fed speak this week. So even if Donald Trump doesn't mention anything about tariffs, there's going to be movements. We're just kind of in that environment. But if we close above 563.02, I see no good reason to stay short the SPY. And in fact, like I said, I see the highs again within probably 3 to 5 weeks, and possibly onto this longer term channel top as we move into later year. The triple Q, which is obviously the NASDAQ 100 in ETF format, has a very similar setup. We have a 9-month channel bottom at 482.32 and a 5/8 Fibonacci at 487.93. So it's the 482, 487 handles, identical to what I just said in the S&P, that once tested, this market's susceptible to falling back, not necessarily within a week or two, but within several months. I wouldn't be surprised to see 359.19, 5-year channel support. Once again, the 5-year trend remains bullish in the triple Q above 359.19. Inversely, if we close above 487.93, I think we've got a bullish employment report on Friday. We may have had some easing tariff talk from Donald Trump, in which case I would anticipate the 540.81 all-time high from last February within quite possibly 3 to 5 weeks, and this channel top at 562.02 within a matter of 3 to 5 months perhaps. But once again, to kind of, I think the emphasis remains one of, despite this incredible rally we've seen, especially late last week, this is still longer term a seller's market at 482 to 487. And I am dead wrong, or the market is basically telling us that we're dead wrong if we're short in this zone if we close above 487.93. And some of the bigger markets are also in the same boat. I mean, I could show you Nvidia. Nvidia is merely retracing back to its 9-month channel bottom. There's the high of the low of 115.10. You've got a 3-month descending channel top at 114.12. So this whole area in the low to mid 110s is a significant resistance zone for Nvidia, where we could top out not only for the week, but through the month of May, and from here fall back over the next month or two to low 80s 2-year channel support. And once again, the 2-year trend remains bullish in Nvidia above 80.75. It's just that we've got this sort of midterm battle going on right now. And if we can close this week above 115.10, I think the worst is over. We'll see progressively higher trade into the 150s again within 2 to 3 months, and on to new highs as we move into later year. But right now, Nvidia in the same boat. It is still a rally to sell, at least at this point in time, allowing for the lower 80s by the end of June or sooner. I could go into Tesla. Tesla, this is a daily chart in Tesla. Nice rally last week, but we're merely pushing into this kind of horizontal channel top at 288.79. Now, if we can close above 288.79 any day this week, I am bullish Tesla as we move through the month of May. But at this point in time, this is your area to sell that allows this market to fall back over the next month or two into the low 160s. The low 160s is this weekly chart here, 5-year channel, 156.77 to 162.87. So you could see it right here. This channel top at 288.39 is a fabulous buy signal indicator if we close above it. But we haven't closed above it. And until then, you have to respect this market's likelihood for falling away. Back into the mid 150s or low 160s, perhaps by the end of June or sooner. And yeah, once again, if we close above 288.39, I would expect 351.39 within a matter of possibly within 2 to 3 weeks. And there's a descending 2/3 speed line at 379.35. I would expect this zone within 3 to 5 weeks of closing above 288.79. But once again, it's not so fast. I see no compelling reason to buy Tesla at this place where we are right now. This is a big pivot point. As long as we do not close above it, the market is likely to fall away over the next 3 to 5 weeks.
Tesla's going to go back up to 400. I'm already feeling it that it has the capabilities or heading back to 400. It might not be closer to the later half of the year, but that retracement back to 400 is very strong and very possible.
Yeah, I think if we close above 288.79, I'm in full agreement of that. And I respect that opinion that you have. And I think it could actually be much quicker than later in the year. I think it could be by the end of June that we could see 400 again if we close above 288.79. And what is your rationale for 400?
Basically this oversell was basically the ties to Trump. It has no fundamental basis why it's down here. Tesla's going to be pushing out more cars. Tesla's production is going to be a lot higher. There's probably going to be a whole lot more money coming in to Tesla, definitely in the later half of the year. And I think a lot of people are allowing their political views or like the media to dictate that where the stock is going, and people are not seeing the opportunities. Just look at the chart. This is, to me, I feel like I've seen this chart so many times where you get a stock that is basically on a downtrend, starts range bounding really hard, and then once it breaks that range bound, it's just a big, huge retracement back up to the high, to the where it was. And once it breaks that 405, to me, it's pretty much a run up. That's kind of my thesis on it, on Tesla. I just feel like it's most of it was driven by the media. If you look at it previously, there was really no reason for it to be down here. And
well, what about the declining market share in Europe, and the fact that BYD, the electric vehicle in China, is kind of cleaning their clock?
Correct, and that's just a simple fact that Tesla doesn't have a strong presence as BYD. Like, I went to Brazil, and this is just something. I went to Brazil and I saw almost 20 dealerships of BYD. I didn't even see one Tesla dealership.
Sure.
So I think the presence outside of the country for Tesla is not as strong. And I think a lot of it has to do with the fact that when companies that are built in America has a way of, like, I wouldn't call it inflating, but they have is a better purchasing power. But what I've also noticed is that, for example, like cars outside of America tend to spread further and farther because they can get into markets maybe that's not really favorable. Like a lot of American, once you get past the regulations in America, you kind of, like, your car mass produce at a high rate, and you kind of get closer over the bell curve, where the rest of the world, they don't really have those regulations, and we have a lot of purchasing power.
There is a lot of talk, though, I think, with the politics, and I agree with you. I think the stock was talked down and sold heavily based on Doge and his
Yeah.
involvement in the federal government. But you've got, they've done a lot of polling, and those who vote left of center are swearing against Tesla forever. And that was his primary audience a year or two ago. I think most of the buyers initially were out of California, who are more, ecologically minded. Those who are right of center tend to support the fossil fuel industry more, and your tried and true 6 and 8 cylinder automobiles, and are less likely to buy electric vehicles. This is my big question. Then, if the politics remains where it's at and is likely to for the time being, I think he's done a lot of damage to his own brand. And so this is where I think I wonder how much upside is possible. But once again, I don't like to venture into this political
Yeah.
macroeconomic guesswork. For me, once again, I'll go right back to this chart. If Tesla closes above 288.79, I don't care about any of that. I'm a buyer of Tesla as we move through May. Until then, I'm staying short or out of the market entirely.
And that's the reason why I agree with you, and that's why I said, like, I seen this chart in Tesla before. This ain't charts like this for Tesla ain't new. The long down after a big uptrend, the long downtrend down, and then the range bound. To me, this is easy. It's a repeat over and over again. It breaks a certain level, the 288 level, then it's like a big burst right up to almost 100%, 80 to almost 100% up to the upside. In my opinion, I feel like this happens all the time. This ain't new. Like, he smoked weed on Joe Rogan's podcast, and the chart looked just like this. And if you let that smoking weed keep you from seeing these type of charts, then you will miss out on opportunities. In my
No,
opinion.
I agree with that. I don't think the weed smoking was a big deal, especially when the left of center, I think, is more supportive of that than right of center anyway. But yeah, I see. I could see if we were to get above 379, I think your 500, this channel here would be the big target, which takes you in the low 500s. This is the way I kind of see the long-term chart playing out. Could closing above 288.79 be the beginning of a fabulous run over the next year into the low 500 region? I just think it's going to be heavily challenged along the way. But I don't know. We could close above 288.79 certainly on Monday, in which case I think it's a nice buy signal.
What I see on the daily chart is what I call a W, and then a W to me is bullish. A W is you get one side of the chart, which you're seeing from January all the way down into like late March. You know what I mean? That downtrend from 500 to basically the low 200s, and then it's choppy, and then choppy in the middle, and then it skyrockets back up, and then that's going to be like an uptrend to like closer to 600. Because I remember we had a podcast where you said, like, man, if Tesla stays this strong, we could see 600, 650 before all the tariffs. And that was back in November. You know
Right.
what I mean? So my point is that stuff like this happens to Tesla all the time, and people doubts Tesla. How many years have doubted Tesla? And this is, to me, this is like a constant repeat of history. And I feel like there's a reason why we have charts. You can look back and you can see kind of the same patterns.
Sure.
You know what I mean? If you
Yeah.
look in between the candles and the lines, you'll see the same exact patterns over and over again. And it's long downtrends, and then boom, and it pops up real big, and then something happens. Smoking weed, Donald Trump, him being on the side of Donald Trump, or I mean, him saying something outlandish on TV, whatever it is, it's just the same pattern, and the stock always comes back.
Right. And this
Elect-
rally here was a 90-day pause
yeah.
in the tariffs. Yeah.
So because it's tied with Donald Trump, once the tariffs relax and everything kind of goes back to normal, we're never saying it's going to go back to normal, but I just, politics aside, just look back at the chart. Look at the history of the chart. Take the
I do.
look back, and you will see, like, it's the same thing. It's like over and over again. It's like, this is what I call like easy money to me.
Yeah, I'm a buyer. I agree with you above 288.79. But until then, I'm a net seller of Tesla as we move through the month of May. Yeah, we're at a pivot point right now, I think.
Oh, same.
Yeah.
Same.
We could take a look. I mean, I've got a lot of other charts here. You want to take a look at Bitcoin?
Oh, 100%. Bitcoin is
Yeah.
doing well now.
So Bitcoin, yeah, 5-year channel structure. We closed above this. I've shown this on your show a million times. We closed above this 5-year channel top last November, and we got up to 109, 192, and we fell back. We tested the heck out of this 5-year channel top over the last couple of months, but believe it or not, we never closed below it. We tested it, and each and every week we closed above it. It's 83,832 right now, and I've been saying, and I still believe that as long as we're above this 5-year channel at 83,832, we can anticipate this full A-B swing, which is a target I've had now since we took this channel out back in November of 122,433. I still think that this upper level is in play by the end of the year. So 83,832 still the base of support, despite all this nasty intra-week violations. We never closed below it. And the last chart I will show is kind of a zoom in on that same. We closed last week above this descending channel top. So this 83,832 to 86,848, this is your base of support through May. I do expect this 102.58 level, possibly this week. This could be a real trouble spot into later May. We could fall away from here. But if we close above 102.58, that 122.433, we're just another month or two away from reaching it. In fact, I'll take you back to this chart. I think holding above 83,832, we're about 3 to 5 months away from 122.433.
Yeah. When we first brought this up, I really wanted it to go down to like 60 so I can buy, I can get, it was more of a selfish thing. But I knew it wasn't ever going to go down there. But to me, that 122 is. I hope you guys are buying. You guys were buying as much as you can when it was in between the 70s and the 80s, because you're probably going to see a ride up for the rest of the year. Bitcoin has become a safe haven.
Yeah, gold. You look at a gold chart. There's a lot of, and you're absolutely right. I mean, as the stock market plummeted, Bitcoin was just hanging in there. And then you've got a rally last week in the stock market, and Bitcoin took off. You can follow the gold chart a lot too. I don't have the gold chart here ready for us, but
it's the gold chart. And like, to tell you the truth, just if you look at the last 6 months, the gold and the Bitcoin chart almost look nearly the same.
Yeah.
Gold is up really, really high, all-time highs, almost like all-time high every week on the gold chart.
I could go to that here real quick. Bear with me for just a second, because I do have gold in another. I do a weekly gold analysis, and I can show a monthly gold chart here. This is a monthly chart that goes back to 1977. And you can see all the waves here. We're in a point where we're in no man's land. All the ABC waves have been met. Now we're in the 1+, 1.38, 1.68, the 2.0. So we're in this sort of hyperbolic rally. I'm telling subscribers, there's no good reason to sell this market. You're only selling it on weakness. I suppose I could show that weakness would be if we close this week below last week's low of 3270.8. By the way, this is a futures contract because I'm a commodities analyst. So this is the gold futures, is the June contract. If in the June contract on Friday we close below last week's low of 3270, I could see this market falling back into the 2800, 2900 region within a month or two before we then turn higher again as we move, into the third quarter.
We always have to have one thing about the stock market I like to say, and I think a lot of like new beginners or intermediate don't understand this. When you touch all-time high, there's going to be somewhat of a retracement at some point. And it may not happen right away, but I always say this: the market always give you a second chance to get in. It's always a second chance to get into it. And if you pay attention to the charts, and the only way you're going to know this is by paying attention to the charts and looking at the charts every day, is you'll realize there's a lot of good companies, even in commodities. There'll be a lot of second chances to get in. And I feel like gold, you might get another second chance to get in at 2,900. To me, because I would think so too. You
Yeah.
can kind of see it, the retracement at 32. You can kind of see there's going to be another retracement. Um,
Especially
and
if the stock market shows strength. If we have broader based strength, recovery in the stock market, implying economic stability rather than chaos, I agree with you. Gold is a flight to safety, as is Bitcoin. And this is going to be interesting to see what Bitcoin does, in the next few weeks. If the stock market shows a buy signal, as I've already shown on those 5/8 Fibonacci's, what will Bitcoin do? If gold then drops away, and I think that's what will happen. If you've got the stock market showing recovery, gold is likely to ease back, not spill into a bear market, but get into that 2,800, 2,900 area over the next month or two. How will Bitcoin react to all of that? It's going to be very interesting to see.
it's going to be, it's going to be not, to me, it's going to be a little bit more interested once Bitcoin gets over that 105 mark, in my opinion.
Hmm.
That's going to be where, okay, you get past 122, or we're going to get another chance to rally back down into the 90s. I think we're going to get to a certain point in Bitcoin where we're never going to see under 100K for a really long time unless something bad happens. Um, at this point, if you don't have any Bitcoin in your account, it's kind of just like foolish. I because you can buy those fractionally.
Hmm.
And I don't know what you think about that, Cary.
Um, yes. I'm a buyer of Bitcoin in the low to mid 80s, and I do think 122 is likely over the next 3 to 5 months. If we close above 102 within 2 to 3 months, overall, I don't know. Bitcoin is one of these. I've not always had a very good feel for Bitcoin. I would have expected 122 a long time ago, when we close above this 5-year channel top.
Yeah, to me, this is this is normal for Bitcoin, in my opinion. This retracement, go back down, big drops, big highs. Like this is all normal to me. I don't think Bitcoin got to the spot where it's like stable, and I think that spot won't be. And this is all opinion based, and this is all from looking at the charts, and also this is all being in Bitcoin since like 2011. It's get up to 20,000, then go back down to like 1,000. That's how, then get up to like 40,000 and go back down to like 15,000. You know what I mean? If you look at the chart, it's pretty much how like it's been going for like a decade, over a decade now. So there's always big swing downs, definitely after it hit a big high. It's like if you look at where the A is, what price
Yeah. This was the top in the stock market in November of 21, the NASDAQ 100. This coincided perfectly with the 1-year bear market in the stock
yeah,
market, if you recall. And so as the stock market continued to get hit and smacked, all the speculative fever that had once occupied Bitcoin
yeah,
was sort of diminished. And then you've got the stock market low, and this rally, it
yep,
totally coincides with the stock market rally. January
correct.
high, you got February high in the stock market, and we've got the collapse.
Correct. To me,
Yeah.
like, but Bitcoin has done this in the past, like big highs, big lows. These are not really I understand it because of that reason. So to me, like, for example, the high over like at that one point over 102, I think what was the high it got to like 109, and then it came
Hmm.
down to like what 75, 74, maybe 73.
74. Yeah.
Yeah, so like that's like a humongous drop. You know, I mean, that's over like $35,000 drop. You
Yeah.
know,
It's like a
that
20,
stuff.
25, 30% break.
Yeah, that's like stuff I'm used to. And I'm not, don't be surprised if you get up 122 and then you see a drop to like 105, you know what I
Hmm.
mean? Or a little bit under 100,000. This is to me, it's like, that's why I kind of like I try to not trade in and out because it's a 24-hour thing.
Hmm.
You know, you might wake up one day and Bitcoin's at 100 and wake up the next day and Bitcoin's at 80.
Sure.
Yeah, it's a really shocking thing. So,
Hmm.
but follow the charts, man. The charts kind of tell you how Bitcoin moves.
Right. Yeah, absolutely. Wild swings is an understatement with this thing. I don't know if you want to look at any other charts. You want to take a look at Apple?
Yeah, we should take a look at Apple. I think that should be the last one.
Yeah, Apple 5-year channel bottom. I had as a target back in December when we tested the top, as a potential target, I might say. It became an outright objective when we closed below this, basically almost a 1-year channel bottom that is now at 217.47. Apple is saying the same thing that a lot of these other stocks and indexes are, that I've been saying now since the top of the podcast. I'll get to that in a moment. But I guess is that there's still headwater, there's still headwinds. There's still a big challenge above the market. Now, what we did do 3 weeks ago is we broke this, actually opened below it on a Monday morning, this 5-year channel bottom at 183.88. And later in the week, that's when Donald Trump relaxed, created exceptions in the tariffs for semiconductors, laptops, electronics, and Apple. I think Cook had a conversation personally with Trump in terms of creating that exception, and that was the rally that allowed the market to hold, essentially close the week above the 183.88 5-year channel bottom. So the way I see Apple for the next, say, 3 to 5 weeks is, I think you can aggressively buy 183.88 if given the opportunity. And I think you can also sell 217.47 to 223.67 on more of a near to midterm basis. Now, longer term, holding above 183.88 does allow this market to continue much higher as we move into later year. But through the month of May, I see the 217.47 to 223.67 descending 2/3 speed line as a range, narrowing weekly, sellable resistance for Apple, where we could top out through May and by the end of June fall back to 183.88. It's kind of a two-sided framework. If we can close above 223.67 in the coming, that is the wrong chart. That's Amazon. If we can close, actually, it is 268.04. So I don't have the right chart here, but I will go back to this one, that if we close above 223.67, then I see steady gains through the rest of the year. Until then, this is the trouble spot where I could see us topping out through May and falling back. And if we were to close below 183.88, over the next, say, month or two, this is the chart I actually wanted to show, then we do enter a significant sell signal that this could be a 2 to 3 month move into the upper 120s to low 130s, long-term speed line, 5/8 Fibonacci on the way down, plenty of give and take in the mid 160s, this old low area here, 164.07, 165.67. But if we violate this 5-year channel bottom, that's a big deal. A 5-year trend remains decidedly bullish in Apple above 183.88. That allows, as we continue into later year, by the third, fourth quarter, the 260s. But if we close below 183.88, I see continued cascading to the downside. I don't know what this means. Maybe no breakthrough in the China tariffs. Maybe it means that Trump has eliminated the exceptions for semiconductors. I don't know. I think the likely outcome is that we hold 183.88 through the rest of the year. The question is, how soon might we see the 260s? And for me, the answer is like within 3 to 5 months of closing above the 217.47 to 223.67 area. So if you're not long Apple now, I think you want to get long if we close this week above 223.67. Until then, you're bottom picking 183.88. I think it's about as simple as you can put it.
To be honest, I agree with you with Apple, but it's starting to kind of like most of all these stocks is kind of waiting if Trump doesn't say anything this week. Doesn't say anything, there's a greater chance a lot of these will hit that target that would turn them bullish.
Mm-hmm.
Am I kind of right for saying that?
I think there's a good chance of that. Yeah, but I don't have a crystal ball in that respect. I have this old adage: I'll let the market tell me what it's going to do. Not that I'm being so presumptuous, but for me, if we close not only back above this 1-year channel bottom that held beautifully about a month and a half ago before we collapsed below it, but if we also close above the trend-defining speed line, for me, this is the upward pivot point into later year. Until then, this market can play ping pong for a while, well into the later second quarter between the low 180s and kind of the upper 210s,
Yeah, sounds good. Hey, Cary, I really appreciate you coming out today, man. Man, it's another great talk, great going over the market. But I do want to ask you one thing.
What's that?
How do you feel like the rest of the year is going to pan out with what you saw in the beginning of the year?
You're going to ask me this question with Donald Trump in the White House.
You see, that's like a trick question. That's like a trick question because
It is.
he says anything. Anything could be. Anything is fair game. It's
I
like
think it's going to be higher. I think we're going to weather this. I think we're going to go back to those highs. I think by the end of the year, we'll take those highs out. I see this ever so cautiously, and I only say it because I do know that Donald Trump watches the polls. He watches the stock market. He has long said that the stock market for him is the barometer of his success or lack thereof. And I don't think this pleases him that his tariff announcements 6 weeks ago or whatever it was has really decimated, or did at least for a while decimate the stock market as it did. We're not out of the woods yet, so anything can happen. But if I were to just sort of bet right now, I'd say we will be higher. We will be at new highs by the end of the year. But everything I just showed you suggests that we may see more downside to come, more bottom picking opportunities in the interim. You know, that's kind of the way I would put it.
Damn. One thing, man. I love what you said, but we need to go over like superconductors, man. Have some next week. Get on,
Sure.
Go over some superconductors because those are the ones that are taking a hit. Nvidia, supermicrocomputers. There's plenty of other from that companies that are coming from Taiwan, Japan, China. A lot of
I had super microcomputer prepared on the charts. We just didn't show it.
Yeah,
but we can say that I have a near-term buy signal in that stock, but there's a big test coming up, and we'll show that in next week's. How's that?
Next week sounds great, man. Have a great week, everybody. I appreciate everybody for listening. Hey, we hear all your comments. Everybody loves Cary, but I would definitely, me and Cary's gonna figure out the commodity thing, and then but I think everybody should get into that futures commodity. He does.
Yeah, it's artacadvisory.com. I appreciate you mentioning it. I cover, I work directly with large ranching and grain growing operations, crude oil refiners. There's a lot of business to business with the commodity side, but there's also a lot of spec traders. I have a daily S&P 500 e-mini letter that I put out for 30 years now. Daily corn, wheat, soybeans, live cattle, feeder cattle, crude oil, et cetera, et cetera. So yeah, I cover it all. I'm from Chicago originally, and I spent 7 years on the floor of the Chicago Board of Trade. So that's where my commodities experience comes from, and it spills into the stock market now.
Man, definitely. I definitely will be bringing that up. We'll figure out, me and him will figure out a source to get people more involved and see how we can do this. Peace.
Thank you, sir. Appreciate it, Kenny. You have a great day.